Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Tuesday, July 29th. Before I begin, I wanted to remind everyone we do have a daily newsletter delivered right to your inbox for this podcast, if that form of content is what you prefer. We just hit 1,000 subscribers for the Substack, and I can't thank the readers enough. The link is down below in the show notes. In today's episode, a look at the week ahead. We got more big tech earnings, a Fed meeting, and a jobs report. Then, PayPal just announced a cool new feature. And finally, Tesla's multi-billion-dollar deal with Samsung. The summer rally continued last week with both the S&P and Nasdaq jumping more than 1% to finish the week at record highs again. Investors seem to be gaining confidence as more trade deals get finalized and companies report solid earnings. In fact, we got another major trade deal development yesterday. President Trump announced that a trade deal with the European Union has been reached. That's a big one because the EU as a whole is the US's largest trading partner. This deal would impose a 15% tariff on most European goods coming into the US. As part of this deal, the EU has agreed to purchase $750 billion worth of US energy and also invest an additional $600 billion into the US. This news could be a nice spark as we head into the action-packed week for the markets. More than 150 S&P 500 companies are reporting earnings this week, including big tech names like Microsoft, Meta, Amazon, and Apple. Now, while all that is happening, the Fed meetings kicks off today. Rate cuts aren't expected from this meeting, but investors are going to be looking for clues from Jerome Powell's press conference for possible rate cuts at the next meeting in September. Then, to wrap up the week, the July jobs report comes out on Friday morning. That will give us more data on how the labor market is holding up. The labor market has no signs of weakness, which is one reason why the Federal Reserve has held off on cutting interest rates. So yeah, this week is like the Super Bowl for the markets. Let's run through some headlines, starting with PayPal. PayPal just announced they will let their merchants accept 100 different cryptocurrencies at checkout, including the major ones like Bitcoin and Ethereum, but also stablecoins like USDT and USDC. I was pretty surprised to see some meme coins make that list too. This new Pay with Crypto feature will roll out in the next coming weeks, and it'll let shoppers pay with their favorite crypto wallet. And when a customer does pay in crypto, PayPal will instantly convert those funds into either US dollars or their own stablecoin, PYUSD. This is also great for merchants because it does lower fees and speeds up the settlement time. These crypto transactions will settle instantly, and the fees are going to be less than 1% per transaction, whereas a credit card transaction has fees of around 1.5% and international fees of around 10%. I'm sure the PayPal executives are hoping this results in a bounce back for their stock price, which is still down more than 70% from its 2021 highs. Let's shift gears and talk about Samsung and their latest partnership with Tesla. Samsung just signed a $16.5 billion multi-year deal with Tesla to manufacture Tesla's next-generation AI chips in Samsung's new chip facility. This new Tesla chip is called the AI6. And this chip is expected to power Tesla's future self-driving systems. This is a huge win for Samsung, whose foundry business has been lagging behind TSMC. Right now, TSMC is the dominant chip manufacturer with nearly 68% of market share, while Samsung sits around 8%. So landing Tesla is a major credibility boost for Samsung as it tries to claw back market share from TSMC. And boy, is it a great start as the stock jumped more than 6% today after this deal was announced. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Shares of Nike are up this morning after JP Morgan upgraded the stock to a buy rating, expecting the company to make a multi-year comeback. The bank thinks that Nike's earnings could grow in the 20% range between 2026 and 2030. That's a big turnaround considering the fact that Nike's sales fell around 10% in fiscal 2025. JP Morgan raised Nike's price target to $93, and for some context, Nike stock is currently trading around the $79 range. So JP Morgan thinks that Nike has some room to run. Nike stock is up more than 4% this morning in reaction to this upgrade. On the flip side, QuantumScape just got hit with a downgrade from Goldman Sachs, who slapped the EV battery maker with a sell rating. Goldman Sachs says the QuantumScape will not be generating any serious revenue until 2028. And then by then, the battery tech landscape might look completely different, meaning QuantumScape's current tech could be old news by then. So Goldman is giving QuantumScape a $3 per share price target, and for some context, QuantumScape currently trades over $11 a share. So that's a pretty steep haircut, and as a result, shares of QuantumScape are down nearly 4%. That's all for today's show. Keep navigating those waters and see you tomorrow.